When we take a swing trade, our swing trading zone, based on the time frame that we're playing, our swing trading time zone, I want you to count 3 to 5. So what we're looking for is a 3 to 5 bar move. Write that down. 3 to 5 bar move. We can get more possibly, but that's the sweet spot of a swing play. 3 to 5 bar move. So think about this. If you're playing a daily swing trade, we're talking a 3 to 5 day play. If you're playing an hourly chart, you're talking about a 3 to 5 hour play. You follow what I'm saying? So it depends on your time frame, but the swing sweet spot is 3 to 5. 3 to 5. It's possible to get more using a trailing stop method. Okay, I won't have time to do that, but that's what we go into all of those details, having your proper swing stop adjustment program in place to maximize the gains once you're in a running play, when to take profits, the appropriate time, by how much should you take profits, because a lot of times you don't want to take all of your profits, you want to take partial profits and trail out of the rest. All of that is more detailed regarding your entire program, but the thing that I want you to understand now is that we're looking for a 3 to 5 bar pop, 3 to 5 bar pop, 3 to 5 bar pop. And the duration of your time frame, your trade is going to largely depend on what time frame you found the play on, hourly, 4-hour, or daily chart. Okay, let's get back. So with that in mind, you are entering here, boom, color change 1, 2, 3, 4, 5. Okay, you're entering here, boom, 1, 2, 3, 4, and still going, and still going. And a very easy trailing stop would be just adjust under each bar, if you like. Boom, 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 boom. That's taking advantage of a swing. That is one swing. Here is one swing. This is why I call it swing trading. This is one swing. The swing trader does not want to sit through a pullback. The swing trader wants the fluid swing out. The swing trader wants a precision entry, a swing and out. This is why I've chosen that 3 to 5 bar move, because statistically markets have a tendency to pause or pull back between 3 and 5 bars of a consecutive run. So the odds start increasing after 3 bars that your market's going to pause. But if you get another bar, the odds have increased more. And if you get another one, the odds are even higher. But that pocket, 3 to 5, is when the odds start to turn a little bit. Oh, you're closer to a pullback, you're closer to a pause, you're closer to an interrupt. So the sweet spot, 3 to 5, okay? And again, the swing trader is trying to get the swing and out, no living through the pullback, no suffering a downward move, wants a fluid move in the direction and out, okay? And that is why I've called it swing trading. All right, so look at your swings. Here is a red bar. You're playing the color change off the 20, swing and out. Color change off the 20, swing and out. All right, color. Here's an entry point right off the 20, swing and out. Color change in the zone. Swing and you're not out yet. Well, maybe you take some profits, but from a trailing perspective, you're not out yet. All right. So 3 to 5. All right, good. Here's MicroStrategy. All right. Stock we're very familiar with here. Now, what I want to show you is I want you to take a look at this. This is a daily chart still. I brought the 200 on this chart and to show you all three together. Now, when we're looking at all three together, we can come up with what I call a macro, not narrow state, which we'll talk a little bit more about in just a bit. That is basically when all three of your moving averages are relatively flat and close together. So if you look at this part of your chart, all three moving averages are relatively flat, and they're not that far apart. It's not like this. This is kind of far apart. So they're sleeping. They're taking a nap, all three of them. And this state of when, and remember guys, this is applicable on all time frames, hourly, 4 hour, daily, right? Same moving averages. When you get all three moving averages taking a nap and they're relatively close together, the market is preparing for its next major move. Now, the question is, you often don't know when that is, so what direction that is. So the narrow state can lead to an explosion this way, or it can lead to an explosion that way. Now, one key sign is, where is the 200? It's not always accurate, but it's a good gauge. If the 200 is the lower moving average, the odds of the upside are higher. If the 200 is the above moving average, then the odds would suggest higher breakdown out of that macro narrow state to the downside. In this case, we've got the 200 is the lower moving average, you see? So the odds of coming out of here to the upside are higher because you're moving at your 200 is a bit lower. Now, once again, there is a way that I teach my traders. When you get a stock that has come out of a narrow state, that first pullback is very important. I call it, we're looking for what I call a halt play. A halt play is that first pullback after coming out and freeing itself from the narrow state. This has to halt. It can't drop all the way back in. It's got to halt. And I need it to halt above the 20 period moving average. Anywhere above the 20 moving average is fine, but I need it to halt and turn. I need a color change play after we emerge out of a macro narrow state. I need to monitor that next pullback. And I need a color change to occur. Before, if it drops back, then it was fake. If it halts and gives me a color change without breaking the 20, that's the starting point of that. You've got a high probability that this is the start of a brand new railroad track run in your play. Okay, so this is the start of an enduring run because you got the 20 MA halt. Just remember that, the 20 MA halt. It's the originator. This is the originator of a lot of very powerful swing trading opportunities, whether it's an hourly chart, 4 hour chart, a daily chart, right? The 20 MA halt is an amazing start to enduring runs, all right? They emerge out of a sleepy state. It pulls back, does not break the 20, gives you a color change, and boom, you are off to the races, my friend. The 20 MA halt. Don't forget that. Now, remember, you're looking for, boom, 1, 2, 3, 4, 5. Do you see that? And then you get the drop. So that drop will statistically come between 3 and 5. Now, you don't count, guys, you don't count your entry bar with the 3 to 5 bar count. The 3 to 5 bar count is after your entry bar. All right? So here's your entry bar now. It's 1, 2, 3, 4, 5. Okay? So your entry bar is not part of the count. Okay? This is not a color change play, but it is a play off the 20. I'm not going to talk too much about that today because I do want to try to get through as much as I possibly can without going into too much detail. All right? Also, it's important for the swing trader to know what the stock's overbought region is. And a lot of times you can judge that by after the stock's first run, swing run and drop, you want that measurement to be a guide for you. Where did it peak? And how far above the 20 did it peak? Now you're going to use that in the future as a guide for overboughtness. Do you understand? And so the reason you want to actually know, you're going to use the market's first one, the first swing run and drop, you're going to use that as your metric to measure the overboughtness. Now, it's not that a stock can't go past that. You just want to know when it's up in that zone, you know now the odds have shifted on you for a possible turn. And the reason why this area is so important when you're swing trading is what if you can get to that area in 2 bars? And so now you're in the overbought area, but you don't have your count yet, but you're in the overbought area. So maybe you want to not necessarily expect 5 bars because you got there in 2 bars. The point is that you need the count, and you need to also know when you're up in the territory where the odds suggest you're going to pull back. So 3 to 5, the odds start shifting that you're going to pull back, but also you've got to shift a pullback zone, an overbought zone, to read and to use those two in conjunction with each other as well. All right? So we use the first run up as, boom, as our distance guide. And so now if you were to take this distance, you're going to find that if you were to move this, it's about the same. You know, it's never going to be exactly perfect. That's not what we're looking for. We're just looking for a general guideline. All right? And so imagine the people that don't know this concept who think this is a buy right here. Like they would think this is a buy because it's taking out a red bar or something like that. But you're in the wrong zone. You see how this green is taking out that red right there? If you don't know how to judge your overbought zones, you can get caught buying the wrong signal. Even that's the wrong signal. It worked, but it's still wrong. And just because something works sometimes doesn't really make it right either. All right? So good. We know how to come up with that overbought zone. Oh, there's one other thing I want to point out to you, which I think is important here, guys. Let me use this. Here are your moving averages. But you can have a stock that swings nicely, overbought zone, pulls back. all right? Swings nicely, overbought zone pulls back. But you can also, this is a very good swing trading stock formation where you get the sharp swings away and pull back, sharp swings away and pull back. But you can have the power trend swing play as well, that it doesn't really swing, it just power trends. And it doesn't really reach an overbought area. You understand? So you have to be able to determine which one you really have. Do you have the power trending swing play where you just sit back and let the moving averages do their work? Or do you have the 3 to 5 bar swing? So the point I want to drill home is that there are two types. This is going to be your 3 to 5. 1, 2, 3, 4, 5. This is going to be your this is going to be your 3 to 5 bar swing play. 3 to 5 bar swing play. This is going to be your ride 'em out power trend play. And you're not going to use 3 to 5 bars here. You're going to use your moving average here. Let that moving average dictate how long you're in this play. So it's important. There's a lot of more details regarding that. I'm giving you broad strokes today because this is just a free master class, guys. But knowing what type you have is very important, because if you apply the 3 to 5 bar swing approach to a power trend swing play, you're going to get knocked out of some of the biggest gains of your life. Do you understand? You're applying the wrong one. And if you apply the power trend swing approach to a play that should be a 3 to 5 bar approach, you're going to give back so much money.